started, guys. Just to let you guys know, I'm going to be recording this session. Part of my job is that I have to submit some proof of work, I guess, and that's what I'm doing today. So I would appreciate you guys if you guys interact a little bit more today, because that's something they look for. Up to y'all though. Oh, Yash, what's up, man? You just joined just in time. We're gonna go ahead and get started with the presentation. So I'm probably move on to the next slide pretty soon. So you can just click the link in the chat here, and you can sign in through there. Okay. But today, guys, we'll be covering chapter 4 of our textbook, and let's get started. So before we get into the details of everything, is there any questions you guys may have concerning the homework or class, or a concern that you guys want me to bring up to Dr. Bennett that you guys may have? Anything at all, okay? Let me know.
Would a test be the same like the last one? Same format?
So if no one has any comments to make, I guess I'll move forward the presentation. Okay.
Hello?
What are the main ideas for the chapter? So in chapter 4, is someone talking? Oh snap! I cannot hear you guys. Sorry about that. Let's see what's going on. What's going on? Oh, sorry guys. Okay, I had it on. I had the chat on mute. Can someone talk, please?
Well, the test is the same like last time.
I got it now, guys. So I just heard you, Kyle. What's going on, guys? I must have missed something. I was wondering why no one was talking.
I asked, was the test going to be like the same format, like the multiple choice?
Yeah, it should be.
At the bottom.
It should be. I believe the test is next week, right? Can someone remind me?
I think so. That's what she said. I'm not mistaken.
Okay, yeah. So I'm gonna be having a meeting with her on Friday, just so I can get that whole what's it called? The same thing as last time, right? So last time I met up with her and she pretty much told me verbatim what was on the test, and I think she might do the same thing again. So I'll probably start doing our test reviews on same format as it was last week or the last time. So I'll have 2 sessions for an hour and a half each, and we'll just hit everything that we're gonna be covering. Okay.
Okay.
Any other questions before we move on? I do feel bad, guys. Sorry if you guys were talking to me earlier. I thought I had everything figured out already. But as I was mentioning earlier, the main ideas for chapter 4 are going to be preparing worksheets, preparing closing entries, the steps to the account cycle, and identifying sections of the classified balance sheet. Okay, so let's go ahead and get started. So I just put together like a short almost like a what's the term for it? A cheat sheet kind of, right? So if I'm after this session, I'm gonna be emailing you all this PowerPoint. You can just refer back to this for the homework, right? So in this section right here, I just included the steps of preparing a worksheet, which are preparing a trial balance, entering the adjustments in the adjusting column, entering adjusted balances in the adjusted trial balance columns, and blah 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 blah. And I attached a worksheet, an example worksheet that you guys can use for when you're doing the homework. Okay. So yeah, that's that. But something important I want to include real quick, because as far as this goes, there's not really much like tutoring or study tips I can offer for this. This is just something that you're gonna have to memorize, you know, the steps. So yeah, I included that for y'all right there. Next up, what I am going to go a little bit more in depth into are going to be closing entries, right? So for closing entries, where are they? So at the end of the accounting period, a company makes the accounts ready for the next period, right? This is called the closing the books. So when we're closing the books, the company distinguishes between temporary and permanent accounts. Okay, all of our temporary accounts are going to be closed, and our permanent accounts, like assets, liabilities, and stockholders' equity, those are going to be the accounts that are actually going to be relevant in the future, right? So like we're going to need to keep those for when we prepare our new balance sheet, right? And our temporary accounts are going to be all of our revenue accounts, all of our expense accounts, and all of our dividends accounts. And so to close each of these, right, we would have to debit the revenue account for its balance and credit the income summary for total revenues, debit income summary for total expenses and credit each expense account for its balance, debit income summary and retained earnings for the amount of net income, debit retained earnings for the balance of the dividends account, and credit dividends for the so yeah, that's that. Just wanted to include a little bit of the same thing here with a little cheat sheet for what are the temporary accounts and what are the permanent accounts, right? And then I also included this right here. So these are going to be some example entries that you guys can refer back to when you're doing the homework. Cool? Is there any questions you guys have about closing entries before we move on? I'm not going to go super in depth into this because I don't want to lecture you guys, You guys need to study on your own too. But if there's any questions about closing entries you guys may have, maybe about how they work and when they're relevant, feel free to ask them now. Also, let me know if I'm talking a little bit fast. I've had like 4 cups of coffee already, so I don't want to overwhelm y'all or anything. Yep, friendly. I'm gonna be sharing with you guys this email like I've done in the past. So at the end of the session, I'm gonna ask you guys to put your emails in this group chat, right? Not the group chat and GroupMe, because I don't want to send everybody the email, right? So at the end of the session, I'm gonna ask you guys to put your email in the Collaborate group chat here. All right. So yeah, I'm gonna be sharing this. Moving on. Okay, so we're almost done with this whole like cheat sheet part. Something else we're focusing on this chapter is the post-closing balance sheet, right? So the post-closing trial balance lists permanent accounts and their balances after the journalizing and posting and closing entries, right? The purpose of the post-closing trial balance is to prove the equality of the permanent account balances carried forward into the accounting period. That's just going to be, we need to have a clean slate for the next period, right? We don't want to carry over any expenses or revenues. We just want to have the actual permanent accounts. And since all temporary accounts will have zero balances, the post-trial balance will contain only permanent balance sheet accounts. And then I included here again something you can refer back to when you're doing homework. Cool. So yeah, all these accounts right here, we see assets, right? These right here are our asset accounts, including this asset account, right? So these are permanent accounts, and then we have our liabilities right here, and then our stockholders' equity right here. All right, so only permanent accounts. And then finally, we're gonna have the accounting cycle. I'm including this as well. It might be a little bit hard to see, but when you actually have this PowerPoint, you'll be able to zoom in on it and mess with the picture, and you'll be able to see everything. But this is just going to be like something you have to remember for that test, right? So she may ask you like, what is step 2 of the accounting cycle? And you'll be like, oh, journalizing the accounts, right? So I included that here. So yeah, that's the little short patient I made for y'all. Now, is there anything you guys want to talk about before we move on to some practice problems? I'll give you guys like 5 minutes to go ahead and give me those. The homework. Okay, Madison. I actually haven't started looking at the homework yet, just because I don't typically cover the homework during the sessions. What I am going to be doing is covering some practice problems in Wiley Plus, pretty similar to the homework. But I guess I could look at it right now and then maybe just give you my some pointers, I guess. So what's the? Does anybody know the page number for the homework? For the problem specifically, because like I said, I don't really look at those too much unless there's a real problem. Okay, I'm holding on. Problem 4.3a, page 200. Okay, I'm looking at it right now, guys. Okay. Let me go ahead and pull that up in Wiley then. All right, give me 1 second, guys. All right, let's see. It was, okay, I'm gonna go ahead and share the screen, okay? And it was P4.3a. Textbook, share, screen, e-textbook. Okay. Yeah, just, okay, you did see that, cool. It was problem P4.3a. Okay, I guess we'll look at this. We'll look over this together, and then I'll get to you. Problem 4.3a for you, Kelsey. Okay. So let's see. Actually, I have to look. I don't even know what the. I guess we'll just look for problem 4.3a first. I guess because I'm not sure exactly what problems are on there. From the homework. So let's just look at this whole entire thing. So P4.3a, the complete financial statement columns of the worksheet Fleming Company are as follows. And then just give us a worksheet. Okay, cool. So they want us to prepare an income statement, retain earnings statement, and classified balance sheet. And that's pretty simple, right? So for our income statement, we would just have to get all of our, it would just be our net income, right? And stuff from there. Oh shoot, what's going on? Sorry guys, I guess we're having some technical difficulties. What happened? What's going on? Hold on, I'm gonna refresh my page, okay? My internet might be messing up a little bit. Okay, P4.3a. Closing entries and then post closing entries and underline balance accounts. Use T-charts, income summary as account number 350. Okay, I got you. Okay, so sorry about that. It took me a minute. So Kelsey, to answer your question, right? If we go back to the PowerPoint I made, right? For that problem right there, you would be using these entries, right? But you would be using them in a T-chart format. I didn't include a T-chart format because I don't really use T-charts much, but I guess I can include that for our next thing on Friday. But these are the accounts you'd be using, right? And you'd make T-charts using this, using these type of entries. But I guess the best. What was that?
That makes sense. I was just confused, like on the T account things, because I don't really use those.
Yeah, no, I usually just use journal entries too. But in the book, they do have a couple examples of those. So you can find those in the book pretty easily as well. In the meantime, I guess we'll just get started on some practice problems, I guess, on Wiley. So let me pull it up right now. Let's see, where's it at? Okay, here it is. Oh, that's not it. Here we go. Dang, it's raining hard outside. All right, so can everyone see this? Yes, you guys can. Awesome. All right, so we're just gonna go through these problems one by one, right? So the ledger of Monty Company includes the following unadjusted balances: prepaid insurance for $4,000, service revenue for $56,000, and salaries and wages expense for $25,000. Adjusting entries are required for expired insurance of $1,200, service performed of $1,900, but unbilled and uncollected, and accrued salaries payable for $700. And they want us to enter the adjusted balances and adjustments into a worksheet and complete the worksheet for all accounts. Okay, so where do we start off? Does anybody want to volunteer where we should start?
You just put in the numbers, right?
Exactly. So you just put in the numbers. So we'd first put in the numbers for prepaid insurance debit. Yeah. So I'm just gonna go ahead and start filling those in. So prepaid insurance is an asset and it carries a balance of 4,000. So 4,000 there. Service revenue 56,000 goes right there. Salaries and wages expense 25,000 goes right there. And then we have some adjusting entries that we need to make, right? So we have an expired insurance, right? So that's going to be an insurance expense, right? So that's going to be a $1,200 insurance expense there. To go ahead and put everything in for the trial balance, right? Or actually, oh no, that wouldn't go there yet.
For the trial balance, you gotta have like your debits and credits. Like you gotta know which goes up on which account, right? What goes up and down each account.
Exactly. So you need to know the normal balances for each account, right? So they're just giving us the balances here, right? But it's up to us to know where we actually put them. So yeah. Hey Abby, thanks for joining the session. If you would please just click the link in the group chat. You might see it. This would be for attendance because I don't want to go back. Okay, so for these last three accounts, is there anything we have to include here? No, there isn't because these are going to be adjusting entries, right? So we're just going to be putting them. Yeah, you got it, Madison. We're just going to be putting them into this next part. Okay, so what should we do for the adjusting entries? Anybody have any ideas?
We gotta figure out what accounts we gotta. So like the adjusted accounts, supplies. Wait, did we have not supplies? Prepaid insurance.
Yep. So yeah, I guess we'll start. So yeah, you're completely correct. We have to figure out what accounts need to be adjusted. And Madison, you are correct. We do have to. We're going to be debiting the expired insurance, right? So let's go back through this. Okay. So, is there any adjustments we have to make for prepaid insurance? Yes, we do. So part A is they're telling us we have to make an adjusting entry for expired insurance, right? So that's just telling us straight up that we lost value. We used a portion of that for the year. Okay, cool. Let's make sure that we're good. So yeah, so for the first part is it's almost like we're doing journal entries, right? So there's two parts for every transaction. So if our insurance expired by $1,200, we're gonna have to credit that for $1,200, right? But also because we lost value by using it, that's gonna be an expense, right? Because we used it during the course of business. So it's gonna be a $1,200 expense as well here. Yeah. Next up, does anybody want to tell me what debits and credits are going to be included
Yep.
for Part B.
Was that my bad. But going back to that, that was a expense and asset account that we
Yes.
just suggested.
Yeah, so every time we make a journal entry, right, there's going to be two accounts. There's going to be an equal. It's almost like how do you explain it? How do I explain this? So for every journal entry you make, there's going to be equal parts to that entry, right? There's going to be a debit side and a credit side that they have to equal to each other, right? Now, since our insurance expired, right, we lost value of that, and we're making adjustment entry. We have to adjust this original balance of 4,000, right? So we're going to bring that down. We're going to credit that by 1,200, but also because we have to make an equal entry for that as well, we have to show that this is an expense for 1,200 as well. Make
Gotcha.
sense?
Yeah.
Okay, cool. All right, so Part B. Anybody have any ideas of what that might be, right? So services performed are 1,900, but are unbilled and uncollected. So we haven't sent them a invoice, and we haven't received that money yet. Okay, so since we're adjusting for this, we can assume that we will be sending them that bill, right? So that right there is telling us we're going to be using an accounts receivable, right? And because it's because we never recorded it, right, and now we are actually recording it, that second portion is going to be for our service revenue. Is that an account listed here? It is. So I guess so for that entry right there, we're going to be crediting our service revenue for 1,900, and we're also going to be debiting our accounts receivable for 1,900. Does that make sense? Any questions about that? Is your guys' test tomorrow? I don't remember that being a thing. Okay, good. Okay, good. Joe said, "Repeat what I just said." In reference to what? In reference to the accounts receivable thing. Yeah, no, everything got pushed because we missed a day of class. So I'm gonna be having our sessions are going to be on Monday and Tuesday before class, maybe like 8 a.m. maybe. Sorry if that's a little bit much for you guys, but that's all I can do. But Joe, I guess I'll just take a stab at what you might be confused about. So for Part B, they told us that services were performed for 1,900, but were unbilled and uncollected, right? But since we're not performing adjusting entries, we can assume that we are going to be sending them that bill now. That's telling us straight away that that's going to be an accounts receivable, because when we send someone a bill, basically they're paying us on credit, right? And second part is that since we never actually billed them, we never actually recorded it, right? So we're not going to be We're not going to be crediting our service revenue for that 1,900 as well. So we're debiting accounts receivable because that's going to be going up, and we're crediting service revenue because it's going up. Okay. Lastly, for Part C, accrued salary payable is $700. Do you remember that adjusting entry? Jack joined back in. Nice to have you back, Jack. I guess I'll just go through it. So if we have an accrued salaries payable, basically that's saying is that we haven't paid that out yet, right? So first things first is we have to record that, right? So that's just letting us know that we're going to be recording a $700 salary, which is payable straight away right there. And then for that next portion it's going to be a what? It's going to be a salary and wages expense, right? Because that's going to be and it's a cost of doing business, right? We have to pay our employees, so it's expense. And then last but least, what should we do next for this last portion? Right, so we have our trial balance, and then we have our adjustments. What's going to go in this last entry, because we don't have any other information up here.
You just add it up.
Yeah, so we're going to be totaling everything, right? And so I guess I'll just be going through this. So go ahead and tell me in the chat what is going to be the balance, right, for that's going to be on this last part for the adjusted trial balance, right? So I'm going to leave it kind of like this so you guys can analyze that. So what's going to be the balance for prepaid insurance? Any guesses? Yash, you are correct. It's going to be a 2,800 debit. Abby, I assume that you got. Where did you get that 1,800 from? Fill me in. What were you? What was your thinking there? Well, I guess I'll just explain to you guys why it's a $2,800. I should just post something. You subtract 2,500 from 700. Let's see. Okay, so what we're doing first is we're going to be doing. We're looking at this kind of like. So I'm guessing you're looking at this number right here for. Yeah, okay. So you're looking at this number right here. So we're doing so when we're making this adjusted trial balance, right? You can kind of think of it as going straight across, right? So it's going to be either a plus or minus of these numbers in these rows, right? It's almost like it's an Excel spreadsheet. Yeah. No, you're good. You're good. Don't worry about it. So it's kind of like an Excel spreadsheet, right? But it's up to us to understand the relationship between these numbers, right? And Yash got 2,800. What he did is that our prepaid insurance carries a normal balance of a debit, right? So that's what's going to make it increase. But from our adjusting entries, we credited it for 1,200, basically meaning that we have to subtract that number out, right? So it's not going to be a debit balance for 2,800. That makes sense. Moving on, for our service revenue, what's going to be the balance there? So we have $56,000 and a $19,000 credit. And Yash, you are correct again, my man. Well, you're correct. I kind of figured you had a typo, right? So, yeah, Yash is correct. So all we have to do now is, let me take a step back. So, service revenue carries a normal credit balance, right? So if we want that to increase, we have to credit it. From our adjusting entries, we had also included a $1,900 credit to service revenue as well. So unlike last time where we subtracted, in this situation we're actually going to be adding. And Yash was correct with an answer of 57,900. Good job, man. Okay, so next part up. I'm probably going to be, this will be the last one where I ask for your input. Well, let's leave it. So what's going to be the answer for the expense account for salaries and wages? Numbers here are 25,700. I guess I'll go. I'm just gonna go through and just update everything. And then you guys can ask me any questions, okay? So for this problem right here, we have a $25,000 debit for salaries, wages, expense from this original unadjusted balance. From our adjusting entries, we put down a debit for 700. All we would have to do is just add those two numbers together, so it would be 25,600. For our accounts receivable, we do not have any accounts receivable at first, so it's just going to be a balance of 1,900. And this would be the same thing for these last three. So just move these over here. 1,200. Okay. And then lastly, I'm going to get you guys to, I'm just going to make sure you got these numbers right. Yeah, we're good. Yep, okay. I kind of just gave away the answers though by doing that. 25,000 plus 700. Yeah, I did for salary, wages, expense. Yeah, because it's just going to be two debits, right? We just push that over into here, add them together. Yeah, exactly. And then last but not least, we're just going to be preparing some income statements, right? If it's a debit and credit, you subtract. Kind of, right? So you don't want to think of debits and credits as plus or minuses because that's not what it means. A debit or credit is just going to be telling you what the normal balance for something is, right? So each account will either be increased by a debit or it's to be increased by a credit. And basically, if you have an asset, right, it's always be carrying a debit balance. So if you ever make an entry for a credit to an asset, you can think of it as you have to subtract that out. On the other hand, though, we have service revenue. Service revenue is a equity account, and equity accounts carry a debit balance, right? So if we want to increase service revenue, we have to credit it. And if we, for some reason, we have a debit for a service revenue, that's going to be subtracted out from it, right? So you don't want to think of these as plus or minuses. You just want to remember, you want to try your best to remember what the normal balance for the accounts. If that makes sense, feel free to ask another question. Revenue is a credit or debit. Revenue is going to be is always going to be a credit unless it's unearned revenue, right? Unearned revenue is going to be a liability because it's not money that we can actually say is ours because we haven't fulfilled the service requirement or the service requirement for it. Make sense? We'll move on if you guys have any other questions. Okay, I'm assuming we're good. All right, so for this next portion, we're going to be preparing our income statement. Before we move on, does anybody remember the formula for the income statement? So yep, exactly, good job, Ashley. So it's going to be revenues minus expenses. So from that information, what do we need to find? So we need to add up all of our revenues, which we already have. It's going to be a revenues of, where'd it go? Here it is, right? So we have to push this over right here, right? For 57,900. We need to find our expenses, which we already did. We just push it over here for 25,700. Right? And then last but not least, we're going to be including our, what is that down there? It's weird. Sorry guys, this is just kind of worded kind of weird. I assume what that's going to be, what that last box is going to be for the total balance. And let me just make sure so I don't give you guys the wrong answer. I wonder why it's like that. Is it this? Weird. I don't know why that's the red. Well, yeah, I mean, I know it's insurance expense. Oh, wait, you know what? I put the wrong number in there for some reason. Hold up, let's see this. 1200. Oh yeah, that's weird. I don't know why. I don't know why. But the thing is I don't understand why that goes there because BRT. Oh yeah, that does make sense. I get it now. So I was under the assumption that this was a our expenses account, but thank you for correcting me. So thanks for correcting me. Yeah. So that's gonna be our insurance expense, right? That carries over. And what would end up happening is that we just have to take all of our revenue right here and subtract out these, and it would give us our total for our net income or loss. All right, so last but not least, we just gonna have our balance sheet, right? So we would just have to carry over all of our permanent accounts, which are going to be our assets, our liabilities, and our equity accounts. So we're going to be bringing over our adjusted balance right here, 2,800 for our prepaid insurance, right? Next, we're going to be over our accounts receivable adjusted balance, which is going to be 1,900. And then we're going to bring over our salaries and wages payable, which is going to be 700. And we're good. So that's how you prepare a worksheet, guys. Is there any questions you guys had about that that's a little confusing? I'm going to take that as a no, and we're going to move on, okay? All right, question number 2. All right, guys. This is going to be the actual fun part, right? So these are going to be our closing entries. Now, let me pull up the little cheat sheet I have. If you guys have your notes from the other day, you guys should have made these down as well. But how do we close? What's that first entry we're gonna make? They gave us the answer already, right? We're gonna be closing our revenue to income summary. And how's that gonna look, right? We know that our revenue accounts carry a credit balance, right? So if we want those to go down, we have to debit it, right? And they just told us where we're closing it to, so it's gonna be that. Now, the hard part is that where do we get that number from, right? We have our service revenue right here, but is there anything else on here that is gonna let us know we have something else to do? No, there isn't. So we're supposed to be pushing that over right here. 105,000. Simple enough. Any questions about this? No? Okay, moving on. So next up is we're gonna have to close all of our expenses to income, right? So any ideas of how that's gonna look? What's gonna be the debits and what's gonna be the credits? Notice that we have a bunch of entries to make, right? So first of all, I guess we'll count how many expenses we have, right? So we have a supplies expense, salaries and wages, utilities and rent. So we're gonna have 4 of those, and we have one other entry to make, which is gonna be to income summary. Supplies, debit. Debit income summary, exactly. So Madison, for closing entries, we do not touch our permanent accounts. Permanent accounts are going to be all of our assets, so supplies, account receivables. Let's see. Okay, cool. Yeah. So yeah, supplies expense. Well, actually, we don't debit that because we're closing these accounts, right? Expense accounts are temporary accounts, right? And when we're preparing and closing entries, basically that means is that we want to get rid of those accounts. right? So Ashley, you are correct. We're going to be debiting income summary. So if we're debiting income summary, we're going to be crediting all of our expense accounts. Okay, so I'll go ahead and put those in. Income summary, and then we're set to do supplies expense, salaries and wages expense, utilities expense, and rent expense, right? So the next thing we're gonna do is just where we get these numbers from. Pretty simple actually. So we're gonna do 3,800 for our supplies expense, or not 3,800. Oops, 9,000. Salaries and wage expense is gonna be 3,800 or 38,000. I mean, utilities expense is gonna be 8,000. And rent expense is going to be 16,000. All we have to do to close it is add up all of those. Anybody want to do the math for me? If you guys are quicker, I'm doing it right now. 8,000 and 16,000. It's just some simple math, so I'll just go ahead and put it straight. It's going to be 71,000. Okay, so we're just adding up all of these and closing them all to income summary. Simple enough. Okay, lastly but not least, we have to close net income to retained earnings, right? So, where do we get that number from? We get that number from where? Should be 34,000. I believe so. Let's see. What does everybody think? Should be 34,000 for the net income. I guess you got that from taking the service revenue of 105,000 minus 71,000. You did. I want to say you're correct, but if we look, yeah, you should be. You're correct. You're definitely right. Okay, so we know the number. It is 105 minus 71,000. You're right, Abby. I'm just having a bit of a brain fart right now. So yeah, it's gonna be 34,000. You got that right. But in what order is it gonna be? Yeah, exactly. Awesome job, Ashley. So we're gonna be debiting net income. Actually, guys, I don't think so. I kind of having a brain fart, right? So let's go back to this. Let's go back to the PowerPoint that I had prepared, right? Just so you can look at this cheat sheet. Because like you guys, I'm not perfect. So what did they do here? Next thing up is that we're supposed to close net income. So to close net income to retained earnings, we're going to be debiting income summary and crediting retained earnings. Okay. Now, where do we get that number from? Let me try to think. So we definitely have 34,000 thanks to this, right? So from our closing entries, we know that net income was our revenue was 105,000, and our expenses were 71,000. But what's confusing me, guys, is that if we look back up here, we have a retained earnings at 74,000, right? So they kind of gave us that number already, which is what I was thinking about earlier. So if you don't mind, I'm gonna go ahead and look back. Oh shoot! You know what? I'm still showing you guys the other thing. I completely forgot. Sorry. Let me fix that. I really wish we could do face-to-face tutoring, guys. It's just so much smoother, you know? But let's go back. Okay. Here we go. Okay, so if we go back up to the top right here, they actually gave us a return earnings number already for 74,000, right? That's a little weird. Like I don't know what they did to get that number. I'm not sure if we're supposed to be adding that or not. So I'm just gonna make that entry that I do know, right? So we're gonna have retained earnings, right? And we're gonna be closing retained earnings income summary. RIP internet connection. Yeah, I'm having some internet connectivity problem over here as well on my end, guys. But we're almost over the session, so let's try to get as far as we can, right? So I'm just gonna go ahead and check my answers so far, just to make sure I'm not giving you guys any wrong information. Weird. Okay, so that is so strange. Income summary, retained earnings then? Income summary, retained earnings. Weird. Okay. Dang, she is really going through it over there. Okay, so that 74,000 number was incorrect, but here's what I might be happening. This is weird. Let's go ahead and use that $34,000 number and see if that's correct. Okay. All right, Abby. Well, I'm gonna take your word for it. And Abby's completely correct. She's killing it today. Sorry about that, guys. I just, it just wasn't in my head, you know, it just went poof. So thank you, Abby, for clearing things up. So in the future, for when we're closing our net income to retained earnings, we're going to want to use the traditional method of taking our revenues and minusing out our expenses. Thanks, Abby. Sorry about that, guys. Okay. And last but not least, we're going to be closing our dividends to retained earnings. And it's going to look a little bit like this. For the sake of time, I'm going to include this. So it's like this, dividends. And our dividends in this example are going to be 22,000. 22,000. And that's it for question 207. All right, guys, it's part 2. We're going to move on to part 3. Any problems before I move on from this, actually, real quick? And actually, guys, we only have about 7 minutes, and I don't want to start this if we can't finish it. So here's what we're probably going to do for the next session. Next session, I'm going to be, we're probably going to work through some actual problems. If you guys have any questions from the homework, I'll probably go over it with you guys again. I'll go ahead and complete that tonight too, so we can talk about it on Friday, and then we'll also be going through the rest of this work. So expect a lot more hands-on next session. In the meantime, you guys can go ahead and type out your emails, and I'll send you guys over that PowerPoint. But thanks, guys, for coming today. Sorry for the brain farts I had earlier. It's been a long day. But thanks, guys. So yeah, if you guys want that PowerPoint, go ahead and post that. Okay. I'll also be sticking around here until 5. So if you guys have any questions, feel free to ask them. All right. But thanks, guys. Have a good night. Okay. Thanks for coming to today's session. Y'all have a good night.